Good morning, guys. JR with Secure Metals Exchange bringing you another technical update for gold and silver. Today, Friday, November the 2nd, 2012. As of right now, guys, this is the way the market is looking. This is the daily time frame. We're right now holding up at around the 38% Fibonacci extension, extending from the 1527 low all the way up to the recent high of 1797. As of right now, again, we are stuck at the 38% Fibonacci retracement. Does look like we're going to continue to head a little bit more south. Stochastics are beginning to turn around here, but it still looks a little bit undecided. So we still don't. It's still hard to determine if this is going to bounce from here and continue to go higher, or if it's going to come down over here, possibly even come down all the way down to the 1630 range, or maybe the 1640 range. By the time this gets down here, it'll probably be looking around over here. I would expect this to hold here at around 1670 though. You have a good line of support. You have a confluence of support, actually. The 108 moving average as well as the 200-day moving average are holding up here at around 1663. Your 20-day and your 50-day moving average are above us at this point. So again, I would look to find support here between the 1660 zone all the way up to the 1670 zone. If these don't hold, then we'll be looking at the 61% Fibonacci retracement down to 1631. This would definitely be the buying area, at least in my opinion here. And obviously, just sit and wait until this thing begins to go higher. But again, we're starting to lose volume here on the downside, so that's fairly positive here for us in the medium term. As far as a longer term time frame, again, a confluence of support here. On the daily chart, you had the 100-day moving average as well as the 200-day moving average. On this weekly chart here, what we have is, let me see if I can make this a bit bigger. So on the weekly chart, what we have is the 20-day moving average as well as the 50-day moving average within this 1660 range here. So again, a lot of support here, at least down at this area. So if it does continue to go higher, I'm sorry, if it does continue to move lower, then we should find literally a wall of support here at around the 1660 to 1670 range. But again, just a really slow market. Nothing's really going on, at least nothing too exciting. Again, with the elections coming up, I don't think we're going to see any big drastic moves until the elections are over. And again, we still have the fiscal cliff to deal with. So again, a lot of fundamentals coming into play here in the next few weeks. Okay, guys. As far as silver is concerned here, silver also, stochastics are looking a bit confused. We are currently stuck again at the 38% Fibonacci, just like gold. And again, you're going to find your support here between 30.40 all the way up to 31 even. Again, Fibonacci extension at 29. Your trend line is all the way down here at around the 28 zone. Is there a possibility that we can continue to go down to these levels? Absolutely, there definitely is. So be very careful and definitely be cautious. Again, as far as this is actually the wrong chart here. So again, if we look at the weekly time frame, again, a lot of a good solid support line here around the 31.14. This is on the weekly chart. You have your 50-day moving average at 30.97, and you have your 20-day moving average at around 30.50. So again, a lot of support here. You have this trend line here that should support. You have this horizontal line here at around 31.14. So between the moving averages, stochastics are getting oversold. And again, not much volume here on the silver market, but again, we should find support here between 29.72 all the way up to 31.18, and hopefully we can continue to start making new highs. So again, guys, not too much to report. We did have some news come out this morning, and this is probably one of the reasons why we had a little bit of a sell-off this morning. So you had non-farm employment change, 171. That was very positive for the dollar. And, of course, the unemployment change the unemployment rate at 7.9, up from 7.8 previously. But again, I didn't really expect this number to go bananas again with the elections. I've actually found it surprising that during the debates, when we had unemployment at 8.3, we had unemployment come down to 7.8. So that was a actually the biggest move, I believe, the biggest drop in unemployment in over 7 years, probably even longer than that. I don't remember the exact statistic, but besides that, guys, again, stochastics are getting on the long term time frame. Stochastics are getting on the oversold area, so we kind of like that, and we're looking to start creating new highs here within the next couple of months. Bernanke's pulled out the printing press. He's currently printing $85 billion on a monthly basis. It'll come down to about 40 billion as of January of next year. But it is an open-ended policy, so they're going to continue to print money. As the money continues to enter the marketplace, you're going to see commodities begin to rise in value. So we'll see what happens here. But again, guys, not too much to report. Not too much to report as of right now. Technically, looking a little bit bearish, but again, not much. We have come down from 35 all the way to 31. So again, I don't expect this to continue. I do expect these levels of support to hold, and I suspect that the buyers are going to come in. If they don't come in now, I suspect that they're going to come in here between these levels here. So again, guys, JR, if you guys have any questions, info@securemetals.com, and we look forward to seeing you guys later. Enjoy your weekend. Bye-bye.